Okay, traders, this is Brad Gilbert with today's trading action. All right, now the Don's still sort of rolling through things, now wants to take over the Gaza Strip. That's going to be a pretty tough investment, but it's away from the tariffs. So the markets have really settled down a bit. Now, if we just come back and have a look at the global markets, just take out the noise, which is sort of Trump at the moment. If you look at the US Treasury yields, right, they are pretty stagnant, right? So the US dollar fundamentally isn't doing much. What we've seen is geopolitical destabilization. We've seen a bit of a reshuffle or a bit of a shake-up in the equity markets and also in the currency markets. But you know what? Things have really calmed down, right? And you can see on the charts, not only have the moves retraced, right? You look at the dollar index, but the dollar, you know what? It looks a little bit fatigued. Okay, on the hourly charts, it looks good for a move to the top side for euro, sterling, Aussie, Kiwi. And finally, we've seen the big move down here in dollar CAD. Now it's come a long way. I can't see it sort of going too far just at the moment, but we're also seeing dollar yen chase it and dollar Swiss, right? So for market conditions, things are looking pretty good. Just keep an eye on these long-term trends, right? The bull bear pivot line, a lot of these is a little bit lower. Dollar yen is right there. So it's got to be in your firing line because this could be the start of a big move down in dollar yen. And the good thing is, with all the Trump sort of paraphernalia going around, you'd think the safe havens are in play, right? Buy yen. It's got to be sort of sitting there. Look at the seesaw action here on the long-term charts on dollar CAD, and you see the same across the board here on the dollar block, right? Euro, sterling, Aussie, Kiwi, a little bit uncertain. So just at the moment, just be aware that we're not seeing a lot of things line up. Now, if I just come back to the live trade hub, there's a few things on today. Okay, so now really this is where the week starts for me, right? We've had a lot of fun and games with the volatility around the tariffs, but today US ISM Non-Manufacturing PMI. Now, you see in some calendars this is called the Services PMI. The forecast is 54.3. Now, the dollar is breaking down. So ideally, weaker numbers are where we should be looking, right? So if you look for like a simple trade plan, ideally lower than 52, right? Because that's the bottom end of the range. If it's below the minimum, that means no one's got it right and there'll be a bigger push to sell. But in actual fact, if we are looking for a simple momentum sort of shift, below 54.3 will get things moving. But 52 is our sort of benchmark where you sort of just run to the trade, right? If we do get that weaker numbers, you're looking to buy Euro, Aussie, Kiwi, probably throw in sterling there as well. And the dollar index, dollar Swiss, and dollar yen. Now, I've left off dollar CAD because it's come so far. It's going to take something massive to get dollar CAD moving quickly again. And to me, the best trade setup is the euro, right? Buy euro. It's got a really good trade setup. And if I just bring you back to that, so you don't have to go looking for too much trouble here, but we have a nice technical line. Now, ideally, what I would like, if I had a preference, I'd like to see, it back down towards 20 on stochastics, looking for a bit more momentum, right? It's pretty much stalled here at the moment, and we do have a resistance line just above. So we've got an entry level not too far away. Now, will that hold before the US data? Probably not, right? I'd say we're just going to see it slowly drift a little bit higher as we lead into the European and then into the North American session. But this is the first chance for the week where we've got a fundamental number that could come out and give us momentum, direction, okay, things we're looking for. Whereas all we've been seeing so far is the Don sort of trying to roll out his, somewhat crazy sort of plans, right? So we're just going to roll with the punches. I think he's going to create a lot of trading opportunities for us, but you're just going to wait for everything to line up. And talking about everything lining up, I do have, I've come to a bit more of a conclusion here on the prime time pro analysis for those traders using prime time. Now, if you get three numbers here, I've just got the major currency pairs. What we're looking for, this is like the traffic light scenario. I know there's four lights instead of three, but if you get three matching lights, well, then it's trade time because to me, sterling, Aussie, Kiwi, right, they are going up short term. Um, the long-term momentum is also up. So it's only a matter of time before the short-term momentum switches. And if that goes green, which it will probably during the Europe, or if we get weaker US non-manufacturing numbers, they'll all go green. Momentum will be up. We'll have three green lights, and this will be a buy across the board here, right? And that's the same for dollar yen. And actually, you know what? Dollar CAD, you can't argue with the numbers because these are completely objective, right? These currencies here are going down. At the moment, we've got a bit of sideways movement on dollar uh, index and dollar Swiss. But once again, the short-term charts on the back of that data will go down and we will have selling opportunities on those pairs, right? So just keep an eye on that as you go forward. This page will be automated shortly and we will be automating the signals there as well. Something sort of reasonably exciting to get into. All right, that's it, guys. So keep an eye on the manufacturing numbers. Ideally, if you're looking for a trade, the no-brainer trade, right, is weaker data below 52, right? Sees a clean out to the downside in the dollar. Now, when the numbers do come out, right, just keep an eye on the price action. If the numbers come out below 52 and we don't see like euro in particular, right, and actually made all the dollar block, but if you don't start to see these things moving high straight away, it means the market is still a little bit cautious around what Trump's doing, right? So we should see fresh moves to the downside in a bunch of these pairs. Let's see how it rolls out, right? So the US non-manufacturing PMI numbers, the key data for today. So keep an eye on that as we go forward. All right, guys, all the best. Cheerio.